Συνεχίζοντας τις παρεμβάσεις και πρωτοβουλίες για το περιβάλλον, η Marfin Popular Bank και η Marfin Egnatia Bank διοργάνωσαν συνέδριο με θέμα Περιβάλλον, Αλλαγή, Κλίματος και Αγορές Εμπορευμάτων. Το Capital TV βρέθηκε εκεί και σας το παρουσιάζει.
There's a view that governments should know what to do. Well, governments don't know what to do. They're kind of a victim of the geopolitics of climate change. It's truly global. No area really wants to go it alone if the rest of the world is not following or about to follow. The idea that the EU will lead by example is very kind of noble, but it would only be sustainable for so long. So, in general, there are kind of a number of open questions that are really quite crucial in this area. Extension to other sectors is inevitable and will affect a lot of people, and Jan Peter's talk at the beginning sensitized you to that in a very clear way. This kind of raises a policy issue, though, of should there be one carbon price for every sector, or should, in a sense, the carbon price be constrained to particular initiatives? Is the power sector a different kind of animal, if you like, than aviation? Is it rather different than petrochemicals? You know, and the way in which the government wants to squeeze particular sectors will obviously be affected by the allowances they give, but maybe the carbon price itself might need to be segmented. The same would go regionally. At the moment, there are a number of initiatives happening elsewhere in the world, in North America in particular, probably Australia fairly soon as well. You know, is this something that will be truly global commodity, or will it stay a kind of local policy instrument? Because ultimately it's really a policy-driven financial instrument rather than a kind of a physical commodity.
It's probably not an over-exaggeration to say that there's been carnage in the commodity markets over the last 2 or 3 months. And at times like this, it's always very helpful to go back and think a little bit about what are the fundamentals driving commodity markets, but also, just as importantly, to understand what is driving the asset pricing at the moment. Now, one of my first economics lectures, John Maynard Keynes, very well understood and respected economist in the United Kingdom. Markets can stay irrational much longer than you can stay solvent. Is it really the end of the commodities asset bubble, or is it really a correction in those prices? Now, this is a chart that is taken to the end of September, and let me just sort of walk you through it. It's off Bloomberg. It is a Goldman Sachs, it's a collection of the Goldman Sachs commodities indices, but it's a sort of an average of them, and it goes back to 1998, and you can see that the bull market in commodities started more or less in 2001. Different commodities have had bull runs at different times, but broadly speaking, it started in 2001. And almost every year since 2001, there is a major correction in the price of commodities. We tend to say correction, but you can say fall if you prefer fall. And you will see that, now this is on a log scale. Now clearly the most recent movements are very, very dramatic in point terms as well, but this is a log scale showing this Goldman Sachs index, and you can see, I'm just going to illuminate this a bit. That's 2002, 2004, 2006, and you can see that we didn't have a correction in commodities prices in 2007, and so commodities are by their nature quite a volatile asset class, but to have 25% corrections intra-year is not unusual.
Hedging is not risk management, that is not the only benefit that comes from derivative. Any familiar person with derivatives talk about the efficiency of the markets, the price discovery of the markets, because I keep hearing people from the shipping community that the paper is leading the physical. But that's a reality, and this should happen. Always the derivative price, as they are forward-looking in nature, should be able to embody and assimilate faster and more information than the spot price that you receive every day from your broker. So what we say to people is that you don't have to start trading FFAs. Just consult your broker, start receiving the reports from the brokers. These embody a lot of information about 1, 2, 3 months out. So you don't have to be an FFA trader. By start receiving those quotes, you open up to a higher set of information that your competitors are having, that the market is having, and you, for a reason, opt not to have. So this is regarding the price discovery function. No physical performance, you don't have to restrict to a specific vessel, so no strings attached to a specific vessel. We have seen intraday trading, believe it or not, to FFAs, so that's a reality as well. No renegotiation and relating and all these ugly stuff that you are doing on your physical business. So these are some indicative benefits of what constitutes the universe of the FFA products.
Are the Greek power prices really high? Well, on the absolute level, I would not say anything right now, but what we can say is that power prices are really subject to global commodities. First of all, oil is a global commodity and is applicable in all the European countries. There is only one oil price. The same thing you could say for coal. Coal is a global commodity and there is only one global coal price. And the same thing you could say for CO2. Okay, CO2 maybe right now it's more European price, but in the future it will become, in our opinion, also a global price. So if you see that those prices are global prices, oil, coal and CO2, why are the prices in Europe then so different? Out of our own experience, and we have a big portfolio with plants all over Europe, we are trading all over Europe, I could say that there are two countries that are really, let's say, the most liberalized and markets, and these are the UK and the Netherlands. Why the UK and the Netherlands? They have always been a bit Anglo-Saxon countries. Anglo-Saxon countries tend to go for fully liberalized markets. So you could say that those two countries are in line with, let's say, the global commodities. So why could you say that in Greece then the price is rather low, but by far not the lowest in Europe? If you look to Bulgaria, you will find the lowest price in Europe. I think that you see out of this graph that there is a real problem, and probably the Greek power prices are still quite cheap with respect to what they should be. The national regulators have to work together, and in the end maybe it should become one European regulator. That the national TSOs have to work together, and in the end it has to become one European TSO. I've been working my life a very big part in South America. I can tell you that some South American countries are far more stable if it comes to regulation than Europe. And I find this personally quite strange as a European. It's sad, in reality it's a sad story, but we should be able to do better.
Over this long period of 10 years, we have been running down, over this whole period, the period as a whole, we've been running down our stocks of crude oil, which is one of the reasons why we've reached, in the last few years, quite low levels of inventory cover. One of the reasons why the market has been fairly tight. So supply is equal demand, the incremental supply is equal incremental demand. Right at the bottom lies the sting in the tail. OPEC capacity over those 10 years increased by only 1.7 million barrels a day. OPEC production of crude oil increases by 4.6 million barrels a day. The capacity to produce more oil only by 1.7. What does that tell us? Very simply, that the spare capacity in the system has come down considerably. So whereas before 10 years ago, prices were very low, we had a lot of spare capacity. One of the reasons prices were low because of the big spare cushion, if you like. Now we do not have that spare cushion. Today the spare cushion is just over 2%, 2.5%, which, can you imagine running a business with spare capacity of only 2.5%? which of course can create havoc if there's suddenly a loss of supply, a curtailment of supply. A hurricane occurs, as it did recently. We had the two hurricanes which caused quite a bit of damage. Fortunately, not as much as the previous ones, the ones in 2005, but that's an example of running a business with only 2.5% spare capacity. That's one of the underlying reasons why the market has been worrying about oil supplies, worrying about oil, and translating these worries into prices.